Oh,
Debit what comes in, credit what goes out.
yes, ma'am. Debit, credit would go. Yes, ma'am. आगे.
Hello, how's everyone doing today? Welcome back to my channel, Your Man with a Plan. My name is Jay, and first of all, I just wanted to wish each and every one of you a very happy new year. I hope this year is one of the very best years in your lives as well as mine. I really wish we will get over this pandemic crap soon and our lives could get back to normal. For now, let's get back to the topic. So, what is cash flow? If you have any friends going to college, specifically in a business or a finance major, you could talk to them. They will tell you all about this. Cash flow is basically a movement of money from in and out of a business. It is a financial statement that summarizes all the cash and the equivalent coming into the company and going out of the company. Cash flow is calculated by making adjustments to net income by adding or subtracting differences in revenue, expenses, and credit transactions. The cash flow statement measures how well a company manages its cash position, meaning how well the company generates its cash to pay its debt obligation and operating expenses. Great. So how does any of that apply to me? So, cash flow is also a concept which can be applied to personal finance as well. A dollar coming in and dollar going out, what do you do with that dollar? That is what it counts. Think of yourself as your own business. You are your own CEO, accountant, sales guy, videographer, editor. That's why your video editing sucks. Hey, that's a work in progress, alright? Just like any other business's cash flow statement, you gotta calculate where your money is coming in and going out to figure out your own progress. In layman terms, it can also mean how much money are you making and how much are you spending, also known as budgeting. So I'm gonna draw this chart out first and then we'll dive more deeper into the details. Alright, so as you can see it on the graph over here, you're making X amount of dollars from your income and it's going towards your expenditure, which is simply the act of spending money going towards either your liabilities or your assets. Liabilities is something that takes money away from you, and assets is something that makes you money. I will also go ahead and put out a list of liabilities and assets in a moment, but ultimately you get to decide where your money is going, and based on the direction it's going in, it could decide whether it is making you poorer or whether it will make you richer in the long run. So if you have a lot of liabilities and you're still racking on to more and more liabilities, in turn it is going to take more money away from your bank account, making you more poorer. At the same time, if you're earning a lot of money and you're spending it all towards your building assets, which in turn is making you even more money, leading to a cash inflow as compared to its opposite brother, a cash outflow. It will make you more and more richer over time, thereby increasing your net worth and making you wealthy by the time you're ready for retirement. Alright, so as you can see over here, I just put in the stuff which was on top of my mind. The list is never ending. It keeps going on and on. Basically, liabilities is something which is taking money away from you, or the value is depreciating over time, whereas assets is something which is making you money, or over time it is appreciating in value. And now you can see in the examples, the top examples about the liabilities are the rent which you pay every month, rent which basically each and every individual pays unless you're homeless. Monthly payments, it could be in various forms, not just utilities. It could be money which is going out for electricity, internet, water, trash, sewer, pest control, plumbing, a lot of other stuff. Car loan, kind of standard, self-explanatory. All of this stuff which kind of makes you feel rich, but it is technically taking money away from you. It's not making you rich in the long run. Like food, gas, groceries, shopping, clothing, entertainment, going to movies, hanging out with friends, partying. It does not mean that you should not be doing any of this stuff. It just basically means that you have to find a nice balance between managing your money and spending your money wisely in liabilities as well as assets to have a fulfilling life and enjoy your life. Moving up to the asset side, you'll see the most common one, stocks. Everyone is buying stocks right now like hot potato. Basically, this pandemic started this whole mayhem about people going crazy on overbuying stocks. Robinhood, Weibo, they just came out of nowhere and got so big like nobody's business. Especially this channel's focus is also gonna be over stocks for a while until I'm able to move on. So stay tuned to that. We will dive into investing and stocks and how to make money and eventually get richer in the long run. But for now, let's focus on this. Other types of investments could be bonds, real estate. So real estate is housing or houses, but it basically means like buying your own house and giving it out on rent by thereby collecting monthly income from it every month. Having your house appreciate in value over time. That sounds like a win-win to me. Having your own business, that's kind of like a no-brainer. If you have an idea which no one else do, you could turn any business profitable. Checking, savings, that stuff is like for the short-term time basis. In the long term, even having money in savings is like losing money overall because of this thing called inflation. It's like hidden tax which you never know it's applied. So if you look at any rich person's background, you will notice that they have a ton of assets and they have less liabilities. Thereby, they're getting richer over time. It takes a while. You cannot become a millionaire in one day. The only variable here is the rate based on where and how much you invest. Bottom line is, if you have a negative cash flow and if you want to turn it to a positive cash flow, the only way to do it is by assessing your finances and making changes as you go. So, what did you know? What have you learned?
Sir, debit what comes in, credit what goes out.
Baby steps. If you guys like my video, please like, share or subscribe. It would help me out tremendously, and stay tuned for the next video where I will be going over my resolution. A couple of videos after that would be focused towards this personal financing stuff, and once we're past that, then we will dive hardcore into stocks, investing, and learning all the basics about that game. Until then, stay tuned and have a good one.